So it's been an interesting week in real estate because, I mean, for whoever follows like inflation reports, yeah, I haven't been following it like religiously, like whenever they come out, but this most recent one was kind of good because it was like an immediate dip in interest rates, a good amount, like half a point. So
Yeah, it was. It's nice to see.
yeah,
It's definitely nice to see, and I mean, because I try to get updates daily, right in the morning to kind of give me an idea of where we're at. Because
yeah.
inevitably, we're gonna get asked every day, how are rates today? It happens all the time.
How rates doing nowadays? Yep, yep.
Yeah. Do you
Which
get
I'm always like, yeah, double what they were 2 years ago, but
that?
trending down or trending up, that kind of stuff.
Yeah,
But definitely a
I
big
think
difference.
that's been the good thing. People that I've spoken to have said the same thing. Oh, we're waiting for them to come down. And there's so much variability on what your individual rate's going to be. But if someone was waiting for it to drop into the 6%,
Yeah,
we're getting close, and FHA, is looking pretty nice these days. There's
and
your opportunity.
one thing I think is good for people to know is that there's ways to get a lower rate without necessarily, obviously, if the market's dipping, helps because your base level rate is lower, but there's a couple ways to get lower rates. Like if you get a credit for closing costs, like my buyers just got a $20,000 credit for closing costs, and their closing costs were $18,000. So obviously, if there's one thing for people to know, if you get a credit from the seller and there's anything left over and you don't use it, it goes back to the seller. It's refunded to them after the transaction. So in their case, for us to be able to utilize a full credit, because they were going to have 2,000 left over, we just bought the rate down. So they saved like $60 on their payment and they got all their closing costs covered. So that's a way, a way to take advantage and get a little bit lower rate.
And for those people that don't know, would you say that this market is lending itself to your buyers or buyers out there getting those types of credits?
It's easier. It's definitely easier, especially if the house needs work. It's 100% easier because I'm doing a loan for someone right now as well, and that house is definitely a fixer, and he got $17,000 in credit. So these are like bigger numbers that we're not used to seeing when it comes to a lender credit. Before it was like you're lucky if you get the termite or take it as is. It's like in the seller counter because there's so many offers. So there being less offers on the table is definitely helping with that.
Yeah, there was definitely also a moment in time, I want to say about a year and a half ago, when interest rates started rising. There was that first wave of people that were like, it hit 5%, I'm out. And there was that moment in time when sellers were doing the same thing. We weren't seeing as many offers. So there was an opportunity right there to get those kinds of closing credits. And I remember you and me speaking about doing like a buy down. There's the programs out there available to get a 2-1 bind down. You being on the lending side, what does that look like?
But a 2-1 buy down is more of a temporary buy down. So you buy the rate down for 2 years, and usually it's paid for through a credit as well, from the seller or from the agents crediting their client. I think it was like a trendy thing going on where people were talking about it a lot. But when they ran the numbers, I had some people do it, but not as many. I would give them the option of a 2-1 buy down or just to buy the rate down, period, with the same amount of credit, So their rate wouldn't go down. I mean, their payment wouldn't go down as dramatically on year one as on a 2-1 buy down, but it would be a locked in rate for a longer term. So they like the stability of that, because with the 2-1 buy down, you will get I don't know, you could say maybe it's not a payment shock because it's coming, but you get used to paying a certain amount and then you got to pay a higher amount, which is a little tricky, but if you buy the rate down in general for the term of the loan, then you don't have to worry about that. because there is no guarantee that the rates will be at a certain level in 2 years. So if you can buy it down a point where it's going to help your payment $400 or $500 off the bat, and that's comfortable for you, then I personally would prefer that. And so I would always lay it out. Hey, here's a 2-1 buy down option. Here's how it's going to work. Year 1, year 2, and then after that it goes back to the normal payment. Or you could just buy it down in general with that same amount of credit. Here's what your payment's going to be, but you won't have to worry about it changing. And a lot of times they would choose that option because also there is a cost to refinancing. You refinance, if the rate does go down, it'll benefit you monthly, but you'll have to pay, usually it's about $3,000, $4,000 to refinance. Sometimes you can get a credit for interest rate chosen to cover those costs, but that also makes your base level rate higher at the moment that you're refinancing. Or you can put the closing costs into the balance of the loan if you have enough equity. But if you're buying something that maybe with 5% down and you're going to refinance and don't want to necessarily add to the balance just because you want to try to get to that 80 LTV as soon as possible, you might not want to add to the balance on the closing cost. So there is a few different things to take into account, right? But there's also ways around it. If the rate dips low enough to where it's going to benefit you, and even if you add the closing costs to your loan, your payment's still going to go down enough for it to make sense, then it's going to be definitely worth it. So a few different things to consider, but as long as you have an option to buy the rate down with the credit, it's a good thing because you're already kind of on the winning side, and it's just a matter of, okay, which of these choices is the one that I want to go with. Maybe if it's a temporary home that you're going to leave in 2 or 3 years, that 2-1 buy down might be better because you're going to want to level up maybe from a condo to a house in X amount of time or something like that. We definitely saw some people jumping on that 2-1 buy down and on the rate buy down. So,
and I mean, like you hit the nail on the head. It's just knowing that option is available. Because I know when I've spoken to people that are like, well, 6%, it just doesn't sound good. And just presenting you could buy the rate down immediately through closing costs or yourself, or you can do a 2-1 buy down. Whatever it is, there's options out there available for the buyer.
And that brings us to something that you and I wanted to discuss, which is, how do you pick the right agent that's going to help you negotiate that? Because that's crucial. Once you're in escrow, is this agent going to make this happen for you? Are they going to present it in a way that it makes sense? Are they going to just be afraid almost to ask or try to persuade you not to ask for that much of a credit? Because in reality, we don't really know how much they're willing to give. And the worst thing they can say is no. So a lot of times, what we tend to do here at the office is we get the inspections, then review the inspection reports with the clients, find out what's important to them or if there's any big ticket items that they're gonna see as an expense in the near future, like a roof or a water heater, anything that's more than $1,000. You would say more than $800 is a big expense item. And then we kind of add those up and then submit the request for repairs. Do you typically ask for them? Well, I guess it depends on the client, right? Do you typically ask for the money to fix it or for the seller to fix it?
100%. It definitely, for me, I've done it both ways. It's going to depend on the client because some want to kind of fund their projects. They want to space it out. They don't want everything at once. And I think if you're giving credit, it helps in that kind of spread things out. But if I have someone who's going to be just thinking about it nonstop, I need to get these things fixed, then I'll ask for the repairs. It really just depends on the client. But I think something that I've done and I like to do is, and I'm sure you've done the same thing, is get quotes. Because if I'm gonna go in and ask for a quite a bit of money, which I have. We've definitely done it where we ask for a lot of money. Having that backup and having something to be able to tell the other side is one of my biggest go-tos. Is I'll have two different people come out and give me their quote.
Yeah. And here's a best practice too, for whoever does get a large credit, and you create an addendum an addendum to add the seller credit and present it to your lender. Never put that it's for repairs. For anybody out there that's getting any credit for repairs, always put that it's just the seller credit to the buyer. You don't have to explain what it's for, because if the lender sees that it is for repairs, they might want to see that home inspection, or they might dig deeper on what those repairs are. So it's always good. Hey, on that addendum, seller to credit buyer X amount, whatever that amount might be, but don't put that it's for repairs for anyone doing that, just to not raise any red flags. The lender's going to be privy to the appraisal anyways, where if there's anything that's extensive damage, the appraiser's going to call it out if it's a problem for the lender. So as long as that appraisal is good and there's nothing in there that stands out to them, they're going to approve the appraisal, and they won't think twice about anything else that's going on at the property unless you present it to them, right? Same thing on like a termite. If the termite is not on the report, if the termite request or the termite inspection is not on the RPA, on the purchase agreement, the lender's not going to ask questions. But if you put it on the RPA, they're going to ask you for the clearance. And there might be something that was negotiated where there is no clearance or whatever. So as long as that's not like what we do on our end, is we don't put on the RPA anything on the termite, anything on the inspections at all. We're still going to order it, but the lender's going to get the RPA, and if there's anything in there requesting the termite clearance already off the bat, it's just going to create that they're now going to want to see that.
Yeah, that makes sense.
If it's like FHA or even conventional, they'll ask for it too. But so I don't know if you've experienced anything like that.
Oh yeah, I mean, the first year you're in the business, you want to make sure you try to check all your boxes, right? And you always think you're doing right by your buyer. If you do, hey, I want to protect them, so let's put the termite. I want to protect them, so let's put X, Y, and Z down. And you don't really understand that this, like you said, could affect somebody's going to want to see some backup. It could delay the timeline. There's all these little things that you don't necessarily think about as a first year agent that being a seasoned one comes with. And I think,
same thing with me, is I learned through bad an experience on that one, is like never doing that again.
Yeah. And thankfully it always works out, as long as you're a agent or a lender that communicates with your buyer. And you have to learn how to manage expectations and learn how to communicate with them. But this is another thing that you add to your toolbox going forward. And I think, we've worked together on a few deals. And I think that's one of the good things when you speak to an agent or a lender, is you have a reputable person to bounce ideas off of. And that's one thing, if you're out there looking for an agent, you want to know that they have references, whether it's the lending side, the inspecting side, go-to contractors, or whoever it might be that needs to help get this deal done.
Yeah,
you want to look for that in an agent. Hey, I got you covered on X, Y, and Z when it comes to a deal being closed.
Yeah, that's an important part. And picking an agent is, hey, how much experience does this agent have? Do they cover this general area of where I want to live? Are they familiar with the type of homes that are here? Like, for example, where I live here in LA, there's these huge trees, like super old, beautiful trees, but there's a lot of roots, deep roots that go underground. And one thing I've known is, or that I've encountered, is that those roots look for water, and the sewer line heading out to the street, that's where the water is. And so that's why it's important, if you do see a lot of trees on the street, to get a sewer inspection, because a lot of times there will be some kind of damage to that sewer, and that's an expensive price to pay to fix it. It's like $7,500. I know, because I just had to pay for it. And it wasn't, but it could be more expensive if it gets worse, because if it's on your lot, it's, you hire the plumber, it's on your own timeline, and it might be expensive, but at least you'll be able to get it done. But if they need to open the street because the roots are breaking the pipe where it connects to the main line, the county line or the city line, it can be expensive, because now you got to get permits. Now you're on the county's timeline or the city's timeline, and you got to rip open the street, which is concrete, asphalt, and you got to get permits because they got to block the street off for that. So it can get expensive. So those little things are important to know, and it's important to work with a realtor that's familiar with those type of homes. That's one example, but obviously there's other examples with just the type of home that's built. If it's a historic home, or knowing when the homes were built, because obviously the older the home, there's going to be some issues with it. So good to know good to know, and good to talk about that with realtors prior to starting your search.
Yeah, and not sadly, but it's interesting that I read a stat that most people stick with the first agent that they speak to about their need, right? Whether it's the buying side or the selling side. And you don't know what you don't know, but I kind of liken it to getting a haircut, right? I grew up, my dad would say, hey, look for the deals. Go to the newspaper, clip out a coupon, and that's where you go get your haircut. Well, you get what you paid for, right? Because when I moved out to LA, I mean, the haircut, you could send $30 here, or you could spend $150. But I one time have gotten that $150 haircut, and the passion and like the way this hairstylist just grabbed my hair and looked at it and told me about my hair, more things than I even knew about. I was like, oh, okay, there's a different level here. And this person takes pride in what they do, and they know how to guide you. Immediately that made me step up my level, because now, it sounds bad, but before you even meet with me, I have to sit you down. I have to know your goals, and we have to narrow down those finances, because I could take you to go see that beautiful home that you want to live in the neighborhood that you want to live in. But does it align with your goal? Does it align with your finances? All those little things are really what's going to make the difference in a transaction, because you could be with this person for 3 or 4 months working on finding you a property or helping you sell your property, and it can go really bad or it can go great.
And it's more than just, do we vibe, personality wise. That is important, it is part of it, but it's also, hey, what's this person's track record? Who recommended them to me? How was their experience? Or if they weren't recommended, if maybe they're your cousin that just got their license, it's like, hey, are you part of a more experienced team where if we run into problems, you have someone that you can speak to that can help us out? Because obviously, if they're a relative, you'll have that, that trust factor already there, just by familiarity, that them. But if they're on their own and they don't have someone they can rely on with a little more experience to help you out or to help them out as part of this overall transaction, it gets tough. And I've run into people where that's happened, and it might even ruin that relationship or that friendship or or that family relationship, which you definitely don't want.
It definitely can. And I think that's the that's kind of the interesting part because, sadly in this business, to get into it, it's not all that difficult, right?
Yeah.
It just is what it is. And
Got
there's
past
people
license, and that's it.
yeah,
License test. Yeah.
yeah. And there's people that get into it strictly because they perceive that they're going to make a lot of money and that it's easy. And those people that think that it's easy, I don't think they go into it thinking that you have to master a craft or continually be up to date on what's going on, not only in the market, but with laws that could affect, there's contracts get changed. All these things get changed. And if you don't have someone that sits you down and say, this is the type of market that it is, and this is what's going to take to get you to where you want to be, well, that's already a red flag. If they're just taking you to view houses, or they're saying, hey, I'll sell it for, your house for whatever price you want,
Yeah.
without sitting down and really going over a game plan, or at the very least looking at some credentials, then you may want to consider speaking with somebody else and at least comparing one other person to, your cousin, whoever it might be.
Yeah. And for any newer agents out there, like, hey, join a team, take it serious, go all in, and you'll do a better job for yourself. You'll do a better job for your clients. And everybody starts with, little to no experience. So it's not like it's an uncommon thing, but just know what you don't know and partner up with the right people. That's going to help you help your clients and your family members that you're helping buy homes or sell homes. Help them have a better experience and make sure that you do the best that you can for them. So yeah, it's definitely an important thing. And honestly, it doesn't, even if you have major decision and you're like, I interviewed my first agent, I'm going with them, checks all the boxes, it still doesn't hurt to just talk to somebody else and just see the difference or get their viewpoint on something. Even if you're like, you know what, my decision is right, still going with, your number one that I spoke with. And I'm glad that I spoke with this other person because it just solidifies that I'm making the right decision. Not to convince yourself otherwise, but just to see what else is out there. So always a good thing.
And I'm sure you, similar to me, a lot of my business now is through referrals. It's people that I've helped that have had a good experience with me that now I can provide value to. And I think that's one good way to look at it. Is there a friend? Is there a family member that really had a good experience and could send you in that right direction? Because, and this is not to boast, but I mean, I still stay in touch with a lot of my past clients to the point where I get invited to, get-togethers with them, or I get invited to some sort of event where they introduce me as their realtor to a family or friends. And I think that, thankfully I've had those good experiences and I have those connections, that relationship with past clients that do that for me. And I mean, that's an amazing thing to have.
Yeah, because if even after the transaction's over, they're still willing to loop you into their life and introduce you to the people that they know and care about, that means that, they're happy with the way that your transaction went with them, and they're going to be willing to vouch for you to somebody else. Because if someone's going to do a great job, then you're going to be open to recommending them to anybody for that reason. It's like, hey, yes, I can vouch for Lorenzo because I work with him and I got the firsthand experience of how it was. And honestly, the same thing with the lender too. It's important that you work with the lender that is experienced, because there's so many details in loans, and even to this day, after doing loans for, since 2010, going on 14 years, there's still new stuff coming in all the time, new regulations, new, changes, industry changes, and little details, because everybody's financial situation or income situation is different, especially if you start adding multiple streams of income, like if this person has a job plus some side businesses or some rental properties. There's a lot of detail that goes into that. And if you miss something very crucial, it could come back at the end of the deal. or at the end of closer towards the end of escrow, and make it tricky because now you're removing contingencies and you want to know that, hey, this loan is going to go through before I remove the contingencies and have my deposit at risk. And then also you want to make sure that that lender is going to be answering your phone calls when it gets a little dicey out there. You know, you don't want them ghosting you in the middle of one of your most important transactions.
And that may sound like it doesn't happen, but where they don't get in touch with you. But I promise you, people out there, I have dealt with lenders, whether it's on the selling side or the buying side, where people are not communicating, and that, you know, thankfully it hasn't killed a deal, but it's been close to killing a deal. Reputation, not just for the lender, goes down the drain, but even the person who referred them goes down the drain. You know, why is this person recommending someone who's not, you know, looking out for my best interest? And at the bare minimum, communicating, you know, within reason, you know, in the same day, you have to communicate. And
otherwise, the imagination can run wild, you know, sometimes you don't
yeah,
hear back.
Yeah, I couldn't even imagine. Yeah, I've had I think a whole 3 days where a lender didn't get in touch, and you, like you said, you go, oh, it's done. You know, this deal's blown up. It's over. And
yeah, it's already stressful enough as it is for the buyers or the sellers, especially if there's multiple transactions. Like if you're a seller and you're buying, there's a lot of people's lives in this mix. It's very important that all the pieces of the puzzles are aligned and that lender's communicating. And even if it's bad news, it's like you want to hear what's going on so you can problem solve and get ahead of it. Because especially if it is bad news, or maybe not bad news, but like an issue that has to be dealt with, the sooner the better, because you're on a timeline, you know, 17 days to remove all contingencies. So that's 2.5 weeks. It's not a lot of time it's enough time, but if you lose 3 days, like you said, now you're at 14 days. It makes a huge difference, right? So every day is important when you're dealing with that. So yeah, same with the lender, same with the realtor. Make sure they come highly recommended. And I feel like most people probably end up finding their realtor and their lender through a recommendation, unless you do like something online where now lenders are calling you and giving you their pitch on why you should work with them or something like that. And even if you're doing something to that regard, there should be some kind of customer reviews online if this person has experience. If there are no reviews, they might not have as much experience as you thought, or maybe they just don't have a social profile of some degree to get those reviews. So you could still find out their level of experience by asking a lot of questions. You'll know right away if you ask the right questions, like how's this person answering them, or do they seem like they're kind of giving me the runaround, or they're being very direct and know exactly what I'm talking about, or it gives you a level of confidence that, hey, they know what they're talking about, and they're going to be doing what they should be doing through escrow, throughout the escrow process as well. So very important.
Yeah, 100%.
Yep. Now, knowing this, what would be your recommendation to someone that's looking for? So they're going to buy. They need a realtor and they need a lender. What do they got to do? How do they go about it?
That's a good question. I would say the first thing is you would have to go through your social circle, and if that social circle has recently bought a home, a good agent, at least in my opinion, you know, everybody does different, will keep in touch with their buyer or someone that they recently, you know, client they recently worked with, at least in that first year. Hey, is there anything you need? Hey, congratulations on your, you know, on your home. How's it going? There'll be some touches throughout there for a good agent. And that should be one of the first things you look at, because, you know, I've worked with you, Jerardo. I've worked, you know, with a couple other agents that do really well at communicating. I think that shows a lot of professionalism. So I would say there. If you're new to the area, I would definitely, like you said, you're gonna end up going through the Zillow or the Realtor.com and look for an agent in the area that has a lot of stars. I've gotten the call from someone that I was not aware of who they were, and through that first conversation, you should be able to get a sense of, hey, this person has a good grasp of the market.
Yeah. And it doesn't even necessarily have to be someone from Realtor or Zillow. You could just Google realtors near me. I think nowadays a lot of realtors also have Google business profiles or websites that you can look at and just pick up the phone and call them. Hey, I saw your work near me here in LA and seemed like a good person based on the videos that you have or your social media. It's so easy to find information on somebody now. It's like, hey, Lorenzo, realtor near me. Oh, okay, let me Google his name. Oh, Instagram, Facebook, LinkedIn, like just that alone will let you do a little bit of research of who this person is up front. And then you can also have a conversation with them and do an interview them as your realtor or as your lender prior to, instead of maybe just picking the first person that calls you off realtor.com or something like that. Because that might not necessarily be the right agent for you. They're just the one that happened to get the lead, right? So also important.
That does happen. And, I think the agents that I've spoken to that have really impressed me, there's a calming presence that they have, and a calming but informed presence.
Yes.
I think that's one thing that you have to look for, because you're going to be in a high stress environment for how long? 2 months at minimum. And they should be able to guide you through that process.
Yes.
So that first phone conversation shouldn't be panic driven. They should be able to guide you through with a series of questions to at least give you an idea of the market, and at the bare minimum ask you what your goal is.
Yeah, exactly. And I feel like you can get a good gist of it. Like me, obviously you and I are friends and I follow you on Instagram and you're always putting out good information. And I feel like that's a good way to know, if this realtor is active in the market or if they're doing this part-time. Like just based on me following you on Instagram, not even knowing anything about you, I could see that you're actively looking at properties, you're actively working with clients, you're actively researching what's going on in the market. And that's important for your realtor or your lender to be in the know and to be in the loop of what's going on, current events, rates, guidelines that might have changed recently for conventional or FHA. Like one that just changed for conventional was where you can buy a multi-unit with 5% down, right? If they're not in the know and you're looking for that low down payment multi-unit, they might speak to the wrong lender. They might tell you have to go FHA when in reality you have other options. So that in itself, just that decision, FHA versus conventional for a multi-unit, you'll save thousands of dollars going the conventional route if you have the right financial situation. So very important to do your research and bounce some ideas off a couple people. And recommendations are good, obviously, because they vouch for you.
Yeah.
And it depends who's recommending them to you as well. But it is a good way to start. But like you said, if you're new to the area, you don't know a lot of people, it is going to be hard to get those recommendations. So you might have to do.
And truthfully, if you're in Southern California, you should just be using me or Jerardo. That's just what.
Hey, call us, make your life easier, okay?
And we got you.
Got the mortgage broker, got the realtor. It's all-star team right there. Easy.
Right here.
The notes, you're gonna find both of our contacts. We just made a decision for you. We're recommending us to you. Done. Not on the end. Podcast is over. We're done with that.
It does, but it does make you think.
Yeah.
Pre-Google, pre-internet or social media, like God, like you get stuck who you're stuck with, and that's it.
Yeah. Or you're looking at through classified ads or something like that.
Yeah.
No, definitely a lot easier now with the with the availability of information that, it's right here. We all got a computer, and we can easily find out information and look at some reviews, and even just, it's so easy to find a lender or a realtor's phone number. You literally just call them and interview them and have a conversation with them, even if you're not ready to buy it or just feeling things out. Hey, that's what you should do anyway. You should be kind of planning ahead and getting ahead of it. So that's good. And just in general, do your research for sure. You'll feel better about yourself while you're in the home search process or the home selling process, to know what's going on a little bit, so that you're not completely, blinded by what's coming.
Dude,
makes sense. I think that's good. I think that's some good info for today, man. Anything else you want to add, or?
No, I think we briefly were talking about cash flowing. You and I both are interested in, on the investment side. I know we both have done deals with people who invest. Yes. And we always get the question about cash flowing in this market. Their interest rates are higher than they have been. It just is what it is. And what are some of the ways to go about, if not cash flowing, at least finding a way to break even? Yes. Because expenses are a part of this, this world.
Yeah, there are some strategies I'm seeing that some investors doing now. A popular one, especially in California with that ADU law, is adding that second unit, or that back house, or converting a garage into a unit, because you're buying a home at the price of a single family residence, but you're adding one unit, maybe a junior ADU. You could do an ADU and a junior ADU. Now you have a property that was just a 1 unit house, and now you have 3 units on it. Now it takes money to fix it up, but there's ways to finance that. There's ways to do it in, you can do an FHA 203K, where you can, it gets a little extensive. A lot of recommendations that I get on that is buy the house first and then refinance into that remodel loan, like the FHA 203K. Or there's fix and flip loans. If you're buying it strictly as an investor, you can do some fix and flip loans where you're buying a home and they're also going to lend you the money for the construction, whatever you might be doing, whether you're adding a unit and remodeling the existing unit. One thing to know on that, it's usually they're going to want you to have some experience. So if you don't have experience, but you do want to get into it, then partner up with someone with experience, because you're going to need to learn from somebody anyways. So pick the right person, someone that has a few of those under their belt, and find the right property. And then you can do a fix and flip loan, because they'll use your partner's experience to qualify you. Because when you do a fix and flip loan or any kind of loan like that, it's more about the deal. It's less about how much you make monthly, but it's more about your experience and the deal itself. Is there enough value in this property to make whatever you want to do work? Like if you want to add a property, if you're buying it for $500 and you're going to spend $300 on adding a second unit, what's that home going to be worth after all that? And if the numbers make sense and you have the experience level, or between you and your partner, you have the experience level, the lenders are going to do it. It won't really matter too much how much you make monthly at whatever job you have or whatever business you have. It's going to be more about the property itself and your level of experience. And then, it's hard to cash flow with long-term rents, especially in the market that you and I are in, which is Southern California. Yeah. But there's other strategies. Obviously, there's Airbnb. You're going to have to research the guidelines of whatever city you're buying in, and make sure that it's okay, or that you're able to get a permit, and that there is a demand for it as well, obviously. So it's going to have to be in an area where there is a demand, and there's websites like AirDNA and others like similar to AirDNA that'll give you those statistics and let you know what the vacancy rates are, and to help you make a decision. And there's one other way to rent. They call it a medium-term rental that's becoming more popular, where you rent a furnished property for 30 days or more. So it's not really a short-term rental because it's 30 days or more, but it's not really a long-term tenant because it's more someone looking for something that's furnished. So usually they end up being some kind of professional, like a nurse or or a doctor, or even the construction workers that are here for 3 months working on this project, and after that they're going to move on to wherever the next project is. All these people need furnished rentals, and they're willing to pay more because it is furnished for the convenience of not only being close to where they're going to be working, but also the convenience of having the property be ready to go, right? It has beds, it has everything you need in the kitchen and the bathroom and all that stuff. So those are a few strategies that people are using now to be able to cash flow, and they're able to make it work. You want to run your numbers and make sure that it will work, right? But that's what I'm seeing. So it is possible.
Yeah. And I mean, you and I have talked about this quite a bit, is people suffering from analysis paralysis. There's so many strategies and so much information out there that you get overwhelmed. And yeah, everybody's going to be in a different stage of life, right? I've helped people that were single professionals, I've helped couples, I've helped families, and all of them are going to be at different stages of life. But for that person who's, maybe up and coming, looking for their first home, maybe doesn't have a family yet, something that we found that could maybe get you, maybe if not cash flowing, at least allow you to save, is house hacking. Finding a single family home or a townhome with several rooms and getting roommates. Just last year I helped a client buy a 4-bedroom townhome. They rented three out, and out of their $4,500 payment, they were just about living rent free.
Yeah, it's pretty good.
And that allows you to save and build for the next one. And now in 2 or 3 years, now you have something that you could rent out completely, and then you could go get another property. So there's definitely, and obviously you have to be willing to tolerate roommates and being a landlord, but that is the person who's thinking ahead and saying, well, I'm going to suck it up for these 2 years and have to deal with people living in my property. But set your rules, find your good tenants, and there's going to be different strategies available to different people at different stages of life.
Yeah, and if you do that legwork up front and pick the right people to occupy the units, it'll be a lot smoother, while they're living there. They definitely don't. If someone's doing that strategy on a house hack, take your time finding the right tenant, and it'll work out great. If you try to rush and just put the first person that you see in there, then that's usually when problems will arise. But if you don't have any experience renting to people, talk to your realtor that helped you buy the property. There, they can help you, vet the right tenant. Help you with the credit checks, help you with reviewing their income documentation, make sure that they can afford the payment that they're going to be having for that unit or for that room that they're renting. And that is another thing I've been seeing too, is like renting by the room, especially if it's close to a university or a college.
Amazing.
Because their other option is to live in the dorms, which is also going to be expensive, and most of them maybe might live there for the first year and then want to kind of move out of the dorms and still be close to school, but they're more willing to rent a room, and they're going to be paying. I've been seeing some rooms that like what a studio or a 1-bedroom used to go for now.
Oh, so, I mean, it's here. I definitely see it here. I mean, and that's also another midterm rental strategy. You could target that area. If you're a student, do you really want to furnish a whole place? No, you're probably going to look for a room that has a bed that gives you a way to. 100%. 100%. So there's strategies out there, and like you said, speaking to a realtor, and a lot of realtors that are in the industry know a property manager, know someone that's going to be able to help you with this idea of renting out a room or renting out an ADU, a JDU, the opportunity is going to be there.
Yeah, you can also leverage your realtor's industry experience, or just the ability to find the answer and help you find the answer. Like, hey, Lorenzo, I want to buy a property that's going to make sense for me to rent it to students by the room. If they know your plan and that's your plan, hey, that realtor is going to research, hey, what are these rooms renting for per room? What's the going rate? Okay, great. Now we know you can rent it for $1,000 per room as long as it's in this particular pocket because it's within a mile of the university. And now it's easier to run the numbers. Okay, well, my mortgage payment, based on what my loan officer told me, is going to be $3,000. So I'm going to need a house that has at least 4 bedrooms so that I can have $1,000 to play with and be able to cash flow a little bit and cover any additional expenses that might come up. So if you're someone that is looking for an investment property, like you said, there's so many options. It's great to narrow it down.
Yeah.
Pick a path. Hey, I'm doing student rental. I'm doing medium-term rental. I'm doing short-term rental. It's a lot easier for someone like us to help them because their goal is it's a very direct goal. Like, hey, this is what I want to accomplish. And we can help them by doing the research for them and helping them out, because this is what we do for a living. So we're doing this all day, every day. They might be doing a different job, but we're looking at, real estate and mortgage industry information on a daily basis. So we can help them do that research. And that way they end up getting a great investment, and they can make it work that way. So definitely a good thing to know. Know what you want, and then you work towards getting that with the right team. It'll make sense. So that takes away a lot of the unknown of getting into the investing part. Hey, do your research, find the right partners, find the answers, and then it makes it a lot easier to execute. So a good tip for us to leave everybody with. So we'll see everybody next week. Lorenzo, it's been great chatting with you, brother. And
as always,
we'll see each other soon.
All right, brother, man. Everybody, you know who to call when you're in Southern California looking for a property.
Yes, sir. All right. Talk to you later, man. Have a good one.